Alright guys, quick TA lesson on Roku Scalp from yesterday here. I'm gonna replay the chart for you real quick, but before we get into that, looking at the daily chart level on Roku, we had a previous descending triangle structure here that previously broke down. Let's go down to the 4-hour time frame so we can see in more details. So as you can see, descending triangle we broke down, and on what's today's date? Tuesday session, we got a full retest and we rejected. So if you're going down to the 15-minute day trading time frame, this blue area, that's the previous descending triangle support. Okay, and what happens when a previous support a demand gives out, which it did right here back in September 22, broke down, and now it's obviously going to act as a resistance, right? And it did. We dipped into that supply, rejected, and the next day we gapped down low, and we couldn't really have, and like have pushed it any higher because we didn't really get much volume. The market was at a pretty tough spot. Well, not really like a super tough spot, but a area where we needed to see some sort of pullback before we really load up on calls. You're right. So my play was getting into. I actually scalped some puts right at open here using that supply, but I wanted to go over the call side example because it gave us more details for me to explain as far as analysis goes. So my area to look for calls here was right over here, right around this area. As you guys can see, you can already see my drawing. It's in a replay mode. That's why there's like lines here, but you don't see anything happening. We'll go over that in a second. But my plan was to get into calls here, right around this area, 58 area ish, because this is the previous consolidation that broke out, and I was gonna use this as an area of demand to get into calls. Remember what we went over here? Previous support, okay? Previous demand level is now a resistance. So what happens to the previous resistance level? It's going to act as a support. And also the fact that going down to the 15-minute chart, we couldn't break out of this range for quite some time, right? 3 days, not too long. But for day trading perspective, it's a pretty good area to look for calls here because this is the area where 3 sessions couldn't break above. But this specific day, this specific area had a lot of buyers push the price back up above the resistance level. So as soon as we saw that, now this area has an imbalance. Okay, imbalance meaning there's gonna be an uneven amount of buyers and sellers, right? Buyers have obviously won. That's how we're seeing a gap up here, right? So the next time we test this area, there's still going to be a lot of areas, a lot of orders lying there, and we're going to be using that as a tool to catch the reversal. So, looking at the Discord, I called out a scalping Roku 59 calls weeklies got filled at $1.25. I typed that out at 5:21 a.m. Okay, I live in Honolulu for those who don't know. 5:21 a.m., which is going to be right around oh, it's a 15 minutes. All right, let's go to the 5. Yeah, so I mean right around 5:21, like right around here, this area. So let's see how everything plays out here first. Okay, let me. There you go. All right, I'm gonna play this. So it goes open, huge gap down, huge sell off. That's where I got in Roku puts again, right up here. Where is it? Yep, Roku puts 4:20 a.m. Got in like right there. But back to the call side example. Gonna pause in a bit. Okay, I'm gonna pause real quick. Okay. So as you see, as soon as the market opened, we pretty much dumped straight down to the area we're talking about. This area right here. Okay, the 58 area ish. And all these green candles here, they're not gonna be anything significant because we haven't made a new high yet out of this structure. So the current structure here we see is obviously a downtrend, right? So what we want to see is a break of structure, meaning that the downtrend structure has to break. We're gonna have to see a new high instead of a new low. Okay. Play the tape again. Drop, drop, drop. Okay, there you go. 5, where's my entry? 518. It's like right around here. Okay. Downtrend, right? And we broke it right here, right? This huge green candle. Let me actually move this box out of the way. This huge green candle right here, that is the oops, sorry. That is the first breakup structure candle here. Okay? Lots of volume coming in. We broke out of this downtrend, okay? Early entry, but for me, I knew where my stop loss was, which was gonna be right down here. If we broke below this blue zone, I would have sold for a loss. Okay, as long as you have that in mind, it is okay, acceptable for an early entry. But the best entry would be if you were to tap here and see a green candle next. Okay, breakout, initial break, and right over here. Okay, so we see a initial drop here. Okay, but we didn't break below this blue zone. And the reason why I have the zone over here is because this is the last red candle. See this small red candle here? That's the last red candle before we saw the breakup structure. And you pretty much want to cover the entire last red candle, okay? Cover the entire last red candle and draw the zone from there. If we go below that, that means this was a liquidation move and we're just going to keep going lower, making new lower highs and new lower lows. Okay? If not, if we don't go below this and we consolidate, that means the orders are accumulating for a reversal. Okay, so let's pay that here. There you go. Okay, so ideal entry would have been after the initial break, we get a full pullback right to that blue area and enter at the next green candle. So right this guy here. That would have been the ideal entry. Okay, but I took my entry here because we were sitting on a nice area of demand right here. Previous supply is now a new demand, right? And the fact that the EMAs were getting, pretty close to converging. They're getting together really tight, getting really tight, and they're eventually gonna pan out later on. You'll get to see. Okay. Now keep playing these out. And we pretty much consolidate for quite some time here. Okay. That was a look. Oh, let me go back a little bit. There you go. Oh no. Yeah. Okay. There you go. All right. So pause it real quick. We consolidated for a couple minutes and then boom. So a huge break here. You can also see the volume candles here too. Let me show the volume profile on the screen. As you can see, I'm gonna put my mouse on the candle. Look at the volume here, okay? This right by this area. 138K, 88K compared to all these smaller guys. We had a pretty big candle here, but that was still 110. We had an 80K, we had a 100K volume. So these two candles alone engulfs the entire range here. What that means is that now there's an imbalance. Up until here, we are in equilibrium where the amount of sellers and the buyers were the same. That's why we're seeing a lot of consolidation. But until this level, okay, we popped out of the entire range, and that means that the retest was confirmed. Remember the retest here, and the ideal entry being this candle, this held, meaning that the buyers held support here, and they no longer want to move chart downwards. And when this whole thing happened, you can see on the RSI curled up. You can check on the 5-minute too. We curled up. Check on the 15-minute also curled up. And you can also see on the 15-minute chart how significant this candle is. I mean, just look at it. Look at this giant hammer candle off of these consolidation range. That's a huge imbalance between buyers and sellers. And that's when reversals most likely going to happen. It's possible we see more pullbacks, but as long as we don't make another new low, meaning it's going to invalidate this high, and instead of, let me pull out my arrow tool. Instead of doing this, it's going to use this as a liquidation move and do this, make a new low. Okay. But like I said, set your stop loss to here. Okay. Or you can also move your stop loss up as we make a move up. But just looking at this area, stop loss still remains the same, right below like 57.70 area ish. But we're not seeing that yet. Okay. Let me keep playing it out. I think that's when I first trimmed there, 428. Oh, sorry, that's the wrong play. 12%, 609, 619, 821. So 609, yeah, right around this pop I trimmed. And when's my next trim? 619. So we'll let that play out. There you go. Okay. So 619, right around there. I trim for 20% again. Again, guys, it's scalps. We are trying to capture smaller profits, but when you do scalp, you do scale in larger, normally larger than swing trades, because you're trying to capture small moves. Okay. And now we're seeing the next pullback here. Okay. Let's see a pullback. It's gonna scare away a lot of buyers, but let's see what happens. Pullback, pullback again. But are we gonna break the key level here? No, we're not. We held the POC. POC is this thick red line here. It stands for point of control. It's where a lot of orders are sitting at, a lot of buy and sell orders. As you can see, the huge volume candle bar here, right? Okay. Oh, and that's another thing I forgot to mention too. Whenever a stock breaks above strong POC levels, it normally results in a reversal. Now, don't go open up your account and YOLO your entire account using that. Of course, you have to take other things to consideration too, like the RSI. Are there any divergence? Is the volume okay? Does the chart look good? Are we sitting on key levels? But this is a good confluence to add on a base like this. Okay, we had a huge POC level right here, but as we break through and pull back, we held it. Look at the series of hammer candles right here. Hammer, 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 right off of the huge volume bar. So when that usually happens, when we break through these big volume areas, it's gonna butter through all these small areas here. Look how small the volumes here, over here, compared to this accumulation area. So whenever we break through these strong POC areas, we're gonna butter through these small volume areas. Okay, I'm pretty sure this pullback probably scared off a lot of buyers, but if you knew your levels, if you knew what was going on overall in the chart, you wouldn't have sold it. Let's keep watching it. A little bit more of the pullback candle. Speed up a little bit. What time is this? When was my next trim? 8:21. So right around this area. Okay. Speed up a little bit there. And you guys can also see the moving average being bullish too. We're trading above the moving average now. Okay. Instead of here. When we were dropping, moving averages were above the candlesticks. Now it's the opposite. We dropped, moving average converged, and now it opened up to the upside. Okay, pause real quick. 821. Yep, right around here. I trimmed for a 30% profit. Okay. The weekly contracts ended up going for freaking 100% plus, but I had to go to bed. I mean, like, for those who don't know, I stay up all the way. So, 8 o'clock, that was like way past my bedtime. And the chart ended up going all the way. Oh, there we go. Yep, pause again. Okay. As you can see, we are from here now in an uptrend, right? We have a new high, new higher low, new high, higher low, new high, higher low, and repeat. This was not a liquidation move. Okay, and normally another thing to keep in mind, when you see such tight accumulation like this break out, all the orders are being sent out. So the volume expands and the chart reverses. Okay. This was another great sign here too. A little bit towards the end of the day, we crossed the this red line here, 200-day moving average. Normally acts as a really strong resistance if we're below it. Broke right through it, and never really looked back since then. Obviously, right here will be a pretty overextended area to get calls because the RSI is getting overbought and we already moved this much. But I hope you guys get the idea of breakup structure. And if you have any questions, comment it away or you can DM me.